we have some models that traditionally we use in the strategic management process. A number of you can remember the concept called SWOT analysis. When we are doing your strategic planning and you are doing your internal analysis, when you are doing your internal analysis and the external analysis, one of the tools that you use to understand where you are when you're doing your position audit is a SWOT analysis. But on this post, the emphasis really is not the use of SWOT for generating strategies, no? But the emphasis is how can we use SWOT to improve performance of the company? How can SWOT analysis be used in the performance management process of our company? So this is our interest. So we know that when we do a SWOT analysis, we're going to identify the strengths that the company has internally and the weaknesses. And outside there, we're able to identify what are the opportunities and what are the threats. Now, how does this help us to improve the performance of the company? Well, it's when we are able to manage. How do we manage? We manage by converting all the weaknesses, all those items that have been properly identified from the customer point of view that they're weaknesses. For instance, I normally give an example of a delivery service, like Debonairs. I know in many parts of the world, Debonairs provide a home delivery service for their pizza. Now imagine that most of the customers indicate that there is a delay. They don't deliver on time. They don't deliver on time, there's a delay. And then you work on the delay, you start delivering on time. What would you have done? You would have converted a clear weakness. A clear weakness would have been converted into a what? Into a strength. And that is how SWOT helps us to improve performance. If you identify the strengths that you have as a company, if you identify all the strengths that you have, what are you going to do with all those strengths? You're going to use them, you're going to match them with opportunities. You're going to use them to exploit opportunities. What happened to performance? We expect that in the process, we're going to see an improvement. What are the threats? All the threats that you see, can you work at converting them into opportunities? And somebody in one of the strategy classes, somebody gave an example that within Lusaka, there was a company which noticed that there were some smaller competitors that were coming up on the outskirts. And they are trying to copy the same business. But these competitors, smaller competitors, were on the outskirts. So instead of this particular big company seeing these as threats, they converted those threats into an opportunity. They simply took over all those, bought them out, and they already had presence on the ground. So they saw an opportunity, and that's what they did. So performance can be improved by matching strengths with opportunities and converting weaknesses into strengths and threats into opportunities. That is how we use SWOT in performance management. SWOT and performance, identify weaknesses which need to be addressed. So that's where the concept sits. Identify key aspects of performance or critical success factors. Those elements where people are complaining, delivery, it means that they are critical success factors. Those are critical success factors because once you improve on them, that's it. So SWOT can help us to identify critical success factors, attach KPIs. SWOT can help us determine the information needs that we must include in our report. Those items on which customers are complaining, we need to monitor them. Those weaknesses, we need to monitor them. These weaknesses, we need to monitor them. Meaning that we need, in our information system, we need to monitor this kind of variables. So it helps us to identify information needs. It helps to set targets, to build on the strengths, to take advantage of the opportunities, and to minimize the weaknesses or the threats. So SWOT can help us identify weaknesses, clear weaknesses, critical success factors, KPIs, information needs, and all that. The current syllabus also, under the models, talks about the generic strategies. It talks about the generic strategies. As part of the planning process. And we know these generic strategies that we need them for us to remain competitive. Within their strategic planning, firms need to identify competitive strategy they intend to use to achieve competitive advantage. To be successful, firms either need to be cost leaders, so perceive cost leadership, or you need to differentiate yourself. Cost leadership being the lowest cost producer. Differentiation, this is getting competitive advantage through particular characteristics of firms' products or processes. So you want to distinguish yourself in terms of characteristics of your products and your processes. The third one is focus. These two strategies are industry-wide then, but we don't have money to focus on the whole industry. So we can achieve competitive advantage by picking a market segment and hit that one with the cost leadership. So instead of attacking the whole market, we can just attack a segment of the market and focus on the segment of the market. And once you go into the segment of that particular market, we can go for cost leadership, or we can differentiate. So these are two possibilities. Okay. Let's continue. What's the implication of these generic strategies for performance? Now, this is what our examiner needs. Yes, we have come across these generic strategies, but the examiner wants you to talk about the relevance to performance management. Cost leadership. is based on keeping costs as low as possible. Management information needs to report on how well this is being achieved, such as cost control and budget variances, production efficiency, cost reduction, and benchmarking. So we need to have performance reports. We need performance reports on, are we achieving this cost leadership? We need KPIs relating to cost control and budget variances, relating to how efficient we are, cost reduction, and also benchmarking. So organizations that pursue cost leadership, there's a specific type of KPIs that they need. What if you go by differentiation? You try to differentiate your product or service with some features which enable you to charge a premium price. Which enable you to charge a premium price. Strategies based on offering customer greater value, based on offering customer greater value to customers than competitors do. We need to identify the key features which form the base of differentiation or the critical success factors. And then monitor performance to ensure high standards are maintained. Key features are often non-financial, e.g. quality, customer service. So entities need the non-financial performance indicators. Non-financial performance indicators. So that's what we need. So the performance management implications is that a company which is pursuing differentiation will be looking at KPIs. And most of these KPIs will be non-financial. Let's go to yet another model. Let's go to yet another model. Again, you have come across Porter's 5 forces. Porter's 5 forces. This is a model that we use in strategy to understand the challenges within the industry. When we looked at corporate failure, what is one of the causes of corporate failure? Instabilities in the industry. The industry is not doing fine. The industry's life cycle is coming to an end. As long as you're part of that industry, you also be affected. So look at the performance of the company. The performance of the company is linked to how well the industry is performing now and how well it's likely to perform in the future. So the level of profit which can be sustained in an industry determined by 5 forces. And what are these 5 forces? The threat of new entrants, the threat of substitutes, bargaining power of consumers, bargaining power of our suppliers, rivalry. Wherever we have these forces, and as they become intense, what happens? The profitability of the margins will be affected. So when we are trying to assess sustainability, or the future of your profitability, we are saying that we can use our Porter's 5 forces to analyze So now let's go to 5 forces and performance management. Again, the issue is performance management. Strength of the forces could affect organizations' profitability, and that's true. Imagine if the customer power is very high, the bargaining power of the customers is very high. From your desired the selling price of 100, they bring you down to 70. How do you make your profit if you've got customers who are this power? Let's continue. 5 forces and performance management. Competitive environment is continuously changing. If changes in one of the forces are likely to affect performance, we need a performance metric which will allow managers to assess the impact of the change. Could help to define critical success factors and KPIs which are important. The 5 forces can help us to identify the critical success factors. Those forces that are high, we need to monitor them together with the KPIs. For instance, what is the key KPI of this force? The threat of new entrant. Can somebody give me an example? We want to assess the threat of new entrant. What KPI can we use to monitor that? Anyone who has an idea?
The cost of entry.
Come again?
Cost of entry.
The cost of entry in terms of what? Investment cost.
Yes.
That is one. Or what of in the banking industry? There is the minimum capital requirement. So imagine that in your industry, there is no minimum capital requirement. Anyone can join. Anyone can join. Patents. How much of your revenue is patented? So imagine 80% of your revenue is patented. What does that mean? This force is not an issue for you because most of the revenue is guaranteed. What of the bargaining power of the suppliers? How can you measure this force? How can you assess it? KPIs? What KPIs can you use?
Switching costs.
Switching costs. And the number of suppliers in the industry. If suppliers for a particular component, if there are many, there are plenty, then you're okay. But if there's only one supplier, then you know that they're in a very powerful position. What are the potential issues with the 5 forces? An organization's profitability could also be determined by its own competences and capabilities, not just the industry. So it's not just the industry, also how competent you are. Problem of market definition. So what do we mean by the market? We're talking about a market. Who is it the market for all cars or market just for the type of the vehicle or car that you deal in? The training market for accountants. Accountants are being trained at all levels, at the technician level, diploma level, professional qualification. So which one are we talking about? Assumes competition between firms, but there may also be cooperation rather than competition. There's so much cooperation today. So be careful with the issue of competitive rivalry. Now let's come to the reason why we brought this. I brought this for BCG. This is the matrix that I was looking at. BCG is a strategic management tool that you can use to evaluate the cash flow generating potential of your products and whether you have got a fair balance. We can use it for products or for business portfolios. We can use it for products. If you've got a number of products, your company has got a number of products. Those products can be evaluated using the BCG metrics. Or if you have a number of revenue streams, you have a number of revenue streams. You have a number of revenue streams. So how do we evaluate the product? So use two possibilities, use the market growth. Are you in a market which is growing very fast or growing slowly? How much relative market share do you have of that market? Let's look at the possibilities. Let's look at the possibilities. So let's look at the possibilities. So we've got a product which is in a high growth market. The market is growing very fast compared to the economic growth of the country. So compared to the economic growth of the country, the market is growing very fast. But also, you've got a high market share. Your product enjoys a high market share. The product then qualifies before the start. You're in a high growth market, but your market share is low. You are question mark or problem child. You are in a market where the growth now is slow, but you've got a very high market share. That is what we call a cash flow. And if you occupy this position, your product or business portfolio is low. So what we get? Well, for a company to perform well long term, you must have a fair balance of products around these grids. You must have a fair spread of products. If all your products are just in one quadrant, then you know that you've got a problem. So we need question marks because this is what will become stars in the future. And we need to invest in this. So that we increase the market share. Remember, the market share is low. So we need to grow the market share by investing. What of this? You need enough stars because these stars with time, they're the ones that are going to come down. They move from there to come there. We need the cash cows because the cash cows are the ones that fund. They're the ones that fund this. The company needs a fair balance of this. Now back again, BCG and performance management. BCG and performance management. Performance measures or KPIs. Performance measures or KPIs should reflect the position in the grid, e.g., stars, question marks, should focus on revenue growth or market share growth, because these are in high growth. What of the management style? What management style are you going to apply here? Management style? What management style?
Profit conscious.
Yes. So that's the style that you're going to apply, the profit conscious. Why? We are not so much constrained by the short-term budget performance, no. We're looking at the long term. So we allow you to spend, even to overspend, to take advantage of the market growing very quickly. So here, you can't use cost control, no. Cost control here, Here, what we want to do is growth. We want growth. We will allow you to overspend. What of those products that are in the low growth that are here? The focus now should be on what? Cost control. We need to manage the costs. Cost control. Cost control. Because the market is not growing anymore. And you want to make sure that you are monitoring your profitability. So what management style are you going to use for products that are in this category? What are you going to use?
Budget constraints.
Yes, that's what you're going to use. So budget constraint or budget conscious, that's what you're going to use. So you want to monitor that. If you have a dog, you may have to look at non-financial issues for you to keep it. Just try the keeping of the dog. What are the potential issues with BCG matrix? How do you define your market share? The market. If the market is growing, which market are you talking about here? This is too simplistic. Some people say you can't just have low and high. What of in between? And here we indicate that we show like high growth represents an attractive industry, but may not be the case for a firm with limited capital. So high growth is not necessarily the best if you want, because maybe you have no money. And these products may also be related. For instance, if you try to kill a dog, you may find that your cash cow is affected because some of the people who are coming here are the ones also who are here, and they like the fact that this product was still being sold. So if you close, maybe some of these people move, or some of those will move out too. Okay. So here, the examiner may want you to talk about management styles. The management styles. Budget constraint, profit conscious, and non-accounting style. Okay, so these are the items that we thought we could review. These are some of the items we thought you could review, go through them together. Okay, so our syllabus is quite wide. It's a wide syllabus. but we need to get the whole essence of the course. The whole essence of the course, you people have been equipped with skills to help your organizations achieve objectives. So that's the whole idea. So how can you help organizations achieve objectives? How can you help your organizations to improve? So that's what this course does. So it equips you with skills of how to help organizations achieve their objectives or improve their performance. So wish you well in your examinations. I'm very confident that the 50, all of you will get your 50s. I don't think 50s will be an issue.
Mr. Perry, before you go, I don't know why I'm always confused, but then Ross, there are times whereby when you look at their examiner's comments, they would say Ross is an appropriate measure for an organization. It's, and then you would look at the objective, it's maximizing shareholder wealth, and you wonder, when is Ross appropriate? I know I keep asking this question because it always confuses me each time I encounter it, because the times whereby Ross is considered appropriate, the other times we said no, we suggest ever in this case. So is Ross a good measure at divisional level or at operational, at strategic level?
Yeah, the examiner normally uses the word. If you look at the examiner's report, they use this word a lot. They say performance management is contextual. You look at the context. So where they said it was good, you must look at the context. But what we can say is ROS is a widely used measure. An average business always wants to know ROS. And we're not saying that you throw away ROS. We're not saying throw away ROS, but we're saying ROS has got some weaknesses. And if you're going to use ROS to monitor shareholders' wealth maximization, you have a problem. So ROS is useful, ROS can be used, but ROS is not adequate. What the examiner is trying to get at is that very few companies look at EVA. It's only big companies that look at EVA. Many companies are still comfortable with ROS. Okay, so the advantage of a performance management system which has got ROS is that ROS is widely available, the data is widely available, people understand it. And therefore, we expect that any organization should use ROS, but don't end there, no. Bring in other measures also, which directly deal with your shareholders well. So that's what we can carry away. Very useful, we need it, but we should not end there. How does that sound, Grace?
Okay, yes, Mr. Pri, I think that's the approach I'll take, provided it comes. So that's the approach I'll probably take if it comes.
And contextual, Grace, service industries. You are running your own audit firm or firm of management consultants. You say, me, I use ROS. Now, context will tell us that you may be missing the point because you have got a very small capital base, very few assets. So your ROS will be meaningless. It will be too big. That's what the examiner means by context. So for an organization in service industry, you need to be very careful then to use ROS. Is ROS really suitable? Because you only have got some furniture here and there, and your laptop and whatever, that's what you have. So when you calculate ROS, it will be big figure. But is that really so? So the context is important. You get the point?
Yeah, I think, yeah, because I think the question that I came across, the company had a lot of hotels which they had, and then they wanted now to lease them back so that at least they can have a proper, they can manage the hotels properly. So I think with the way you have put it, it makes sense because they are asset intensive. They have quite a number of assets. So ROS would be a good measure for them.
But now, Grace, I can add there, as you are moving from, they used to have a lot of assets, now they sell all the assets, they start leasing them back, again you bring
They wanted to lease them back, yes.
Yeah, then you are saying that would ROS continue to be useful to that company? Would ROS continue to be useful? The answer is no, because now very little property. And that's the kind of thinking the examiner wants. Is this KPI still suitable? So assessment was that earlier on, it was quite okay, but after getting rid of all the hotels, the usefulness was further reduced. Okay, any other questions? Now I know on this forum that I've got students who are headed for March. Students that are headed for March, I've got a couple of students already who have headed up the March. We regroup next week. We start running towards March. Okay. And we are going to start with what we are looking at today. We'll go to our area A of the syllabus, start running slowly. From A, we go to B, we go to C. By the time we are hitting end of January, we must really be done with our syllabus and we start revising as well. So I know you may have grasped items here and there, but now I'm going right to the beginning and we start building and building and building. So those are candidates who are taking the March exams. Starting next week, we want to start running again. The students who joined us from Joburg and the ACCA, we hope you have enjoyed your lessons with us. I'll be communicating with you also over your forum. I've got your forum there. I'll be communicating with you to see what other support we can give you. Otherwise, we wish you well in the exam and let us know which topics would have come in your paper, because each one of you has got a different paper. You all won't do the same paper. You'll be doing different papers. Of course, some of the questions will be common, but let us know, just share with us what would have come in your paper, so that we can see the kind of thinking of the examiner. However, if you have got any questions, please just post on the forum. I know that tonight we are studying, tomorrow it will be heavy study. Call me or post a question there. I constantly check the forums, I'll respond. Otherwise, thank you very much. We wish you all the best in your examinations. Go and do your best. You only need the 50%. Don't leave any question undone. Every question, please say something about it, so that the examiner does not give us any 49s anymore. We don't want to see that penny mark of 49. And you start saying that there's just one item I left out. We don't want that. If you have any questions, please inbox me directly, give me a call, ask me to give you support. Otherwise, I wish you all the best in the coming exam on Wednesday.
Thank you so much, Mr. Piri.
Thank you, Mr. Piri.
Thank you, thank you, thank you.
Bye.